I would like to take this opportunity to thank my colleagues who worked hard to schedule the event so that it matches the expectations of our respected guests and highly accredited scholars attending the conference.
بسم الله الرحمن الرحیم اللهم صل علی فاطمة و ابیها و بعلها و بنیها و سر المستودع فیها و عدد ما احاط به علمک. My paper is titled Designing an Innovative Way for Financing SME Through Sukuk Issuance. As you know, market-based financing for SMEs had a lot of advantages for this important part of economy. Including increasing the resilience of SMEs against economic shocks. The other is that the market-based financing SMEs reduces the dependence of SMEs on banking loan, which is so important in our country because bank loans are the most important way of financing SMEs in Iran. The other is that market-based financing for SMEs provide opportunity to increase the financing of SMEs in the country. And the other is it's provide portfolio diversification for investors. And it increases the connection between real economy and the financial sector. Our method in this paper constitutes 5 steps. At first, we extract challenges of financing SMEs. Then we design 7 models based on themes that we extracted before. Then we present 6 criteria to rank these models, and then we use top 6 model to rank them. And then the selected model, we design the key features of the selected model. Challenges of issuing SMEs in Iran, as we interviewed with experts and study previous works about this issue, are credit risk management, and the other is imbalance in risk return in Iran because of the rate ceilings that imposed by central government. The other is that internal management of SMEs. As you know, the managers of SMEs are not so professional to know about the process of issuing sukuk. The other is the high risk of SME default. And the other is the strictness of Islamic securities issuance resolutions in Iran. As you know, the SEO of Iran to provide protection for retail investors impose hard resolutions for originators to issue sukuk. The other is that the high cost of issuing sukuk in Iran, including underwriting cost and the guarantors cost, that makes the issuing sukuk for SMEs non-feasible. Designing SME sukuk, we first assume one criteria is that we should have intermediary between investors and SMEs. This intermediary is a financial intermediary that issues sukuk on behalf of SMEs. It has a lot of advantages, like it eases the access to guarantor, as the financial institutions have a better relationship than SMEs with guarantors like banks. The other is the possibility of using intermediaries' asset as a collateral to facilitate the challenge of credit risk management that I mentioned before. The other is the ease of credit rating assessment. As a financial institution is very easier to assess the credit risk of this institution than SMEs. The other is to implement the requirements of issuing sukuk, and the other is cost effectiveness for scaling the sukuk issuance, as we construct a portfolio and the financial intermediary issues sukuk to finance this portfolio. For choosing the appropriate model, we design 6 criteria based on interviewing with experts and the experience of SME finance in Iran. These are compatibility with a medium-term to long-term time horizon of the applicants. The other is that uncomplicated sukuk structure, flexibility in using proceeds, no need for underlying assets. It's a very important criteria because a lot of our SMEs lacks the fixed asset. The other is possibility of extending sukuk maturity, as we know a lot of SMEs face problems in running their projects at time. The other is the possibility to use the model in different sectors. We designed 7 models, including tawarruq, ijara, musharaka, manfa'a, salam, wakala, wa bay'ad-dayn. Based on the assumption that I mentioned before, having an intermediary between investors and SMEs. Using TOPSIS model, the wakala sukuk appointed as a best model for issuing sukuk based on the criteria on this slide that I mentioned. This is the structure of wakala sukuk in our paper. In this diagram, SPV issues sukuk using sale factor and then collect funds from investors, then signing originator as a wakil. Then the originator allocate funds to the SME portfolio and collect the interest and principal from SMEs. Then the originator pays the principal and SMEs using payments factor. The important point is that we consider conversion option to SME shares to increase the attractiveness of financing SMEs. As I mentioned, because of the rate ceiling in Iran, there is imbalance between risk return in SME finance. The important feature of this contract is that wakala is somehow a loss sharing contract, and does not have a fixed interest rate or fixed profit rate. So the profit management in this contract is a very important feature to finance SMEs. In order to handle this problem, we use 2 main structures, compensation for the profit deficit and creating a profit reserve account. At first, we use 3 ways to compensate the profit deficit. The deficit between expected profit and the actual profit. If the actual profit is less than expected profit, we can use these three ways. These are donation of the profit deficit by the originator to sukuk holders. And we also analyze these ways in a jurisprudential approach. The other is that we can obligate the originator to purchase the underlying asset at certain price at maturity to cover the risk of profit management. The other is profit guarantee by a third party that this way is using in banking system now in Iran. The other way is creating a profit reserve account that uses in very Islamic countries like Malaysia. Reserve account is an account that SPV, I mean the wakil, should pay periodic payments to this reserve account, and if at any periodic payment time its collection of the interest is less than the expected profit, the profit will be paid using this account or at maturity. If at maturity the profit that gained from our portfolio is less than expected profit, the deficit will be paid using this profit reserve account. The profit reserve account has two advantages. It motivates wakil to earn profit. How? Because if the wakil earns more profit than expected profit, the surplus profit will be for him at maturity. The other is that ensuring and smoothing the periodic payment that I mentioned. The two more important feature is construction of SME portfolio by wakil and its reporting. As we describe in our paper, the wakil should report characteristics of its investment. And the other that we propose in this model, that the wakil should not use profit loss sharing, because lack of transparency of SMEs that is one of the most important challenges of financing this sector. The other characteristics, the other important feature of our model is to monitor the performance of the originator. That is very important because wakils handle the funds and it can invest in any way because of the wakala contracts inherent. We propose two ways that trustees' participation in the budget process. Trustees should participate in the portfolio construction by wakil. And the other is increasing the skin in the game by wakil. I mean, the originator should invest from his funds in this portfolio to have a skin in the game and decrease the risk of moral hazard. Thank you for your attention.
So may I ask the second paper, the author of the second paper, Mr. Saiduddin, to start talk?
بسم الله الرحمن الرحيم رب ادخل لي مدخل الصدق واخرجني مخرج الصدق واجعلني من لدنك سلطانا نصيرا. Ladies and gentlemen, at the beginning I'd like to appreciate the presence and participation of all you dear peers, students, teachers, professors, and financial market activists to this conference. And I hope we can reap the most out of this meeting finally. This is Ibrahim Sadreddin, Head of Financial Engineering Department in Persian Gulf Investment Bank. At the commencement of my lecture, I'd like to officially announce my special thanks to my dear colleagues and the co-authors of our research, dear Professor Mohammad Ibrahim Mohammad Purzarandi and dear Dr. Muhaddis Razaqi, whose their constructive contribution in propelling the quality of this research cannot be denied. Given the escalating housing crisis in Iran during recent years, many scholars and academic figures contend that financial innovations have the potential to offer viable solutions to alleviate the issue. After the introduction of National Housing Movement Plan by the government of Iran, which envisions the construction of millions of houses during almost 8 years, the most prominent obstacle in the way of the implementation of the plan is still the scarcity of financial resources, especially considering the inadequacy of our banking system in feeding the plan thoroughly. That's why we are seeking in the capital market to find a viable solution to do the plan. To shed light on the reasons behind the limited success of financial instruments in our housing sector, we interviewed with 27 experts, asking them about the obstacles and drawbacks of construction funds and real estate investment funds. And finally, we came up with a combined financing approach utilizing the issuance of unrestricted vekale and NHIT. NHIT is the abbreviation of National Housing Movement Plan. Sorry. It's not ready, it seems it's not ready. NHIT is the abbreviation of National Housing Investment Trust. It's, in fact, a double tranche fund composed of a construction fund and a real estate investment trust. I have some more elaboration on it and continue. But before introducing our proposed model, I'd like to highlight the significance of housing crisis in the eyes of international organizations. This is a fact that housing crisis has become more pervasive and relatively ubiquitous. Almost all over the world is struggling with this challenge. For lack of time, I just refer to two of these organizations. Based on the WHO, there exists a close relationship between human physical and mental health and standard houses. In fact, standard housing is inextricably intertwined with physical and mental health. But unfortunately, according to the World Bank, by 2025, more than 1.6 billion people all over the world are susceptible to be influenced by the detrimental impacts of substandard houses. That's why a wide range of international organizations are issuing warning about substandard housing. For lack of time, I skipped numerous diagrams indicating the surging trend in houses prices and rental costs in the United States, in the UK, in Canada, in Japan, in Denmark, in Sweden, etc. But as this table contains some critical insight and pertinent information, let's focus on it for a moment. One of the housing affordability indices is housing P/I, housing price to family income ratio. A higher P/I is equivalent to a lower housing purchasing power. There is a stereotype that developing countries are experiencing a much more intricate and severe housing challenges compared with developed countries. I want to disabuse you of this misunderstanding. As you can see in the table, some developing countries such as Saudi Arabia, Oman, United Arab Emirates, South Africa have successfully managed to provide their people with affordable houses. But unfortunately, as you can see, Iran stands almost at the bottom of this table, indicating that Iranian people are struggling with affording the back-breaking houses costs. In terms on M2I, the situation is more intricate. Let's skip these slides. Here are some factors, some reasons indicating the inadequacy of our banking system that I pass. And let's shift to our proposed model. Our proposed model is composed of three different pivots. The first pivot of our proposed model is the issuance of unrestricted vehicle. The second pivot of our model is the construction fund, and the third one is the real estate investment trust. Here are some factors hampering the success of construction funds in the eyes of our interviewees. Lack of periodic distribution amounts, suspicion in achieving enough expected return, lack of landowners' interest in transferring ownership to construction fund, the restriction on investment in project under construction, constraint in investment in commercial, administrative, recreational infrastructure, and other projects, and so on. And here are some factors hindering the success of the real estate investment trust in the eyes of our interviewees. Our proposed model have covered almost more than 80% of these deficiencies and drawbacks. At the first stage, The NHIT, which is considered as a double tranche fund, takes the initiative to establish a construction fund. The government provides free land and pertinent construction permits to the construction fund. And after that, the land and the pertinent permits are valued by official judicial experts, and equivalent to the value of these assets, investment units are issued for entitled participants. It's a very important point that all participants benefit from the free government's contribution evenly. It guarantees not just the distributive justice, but also it leads to a higher return of the construction fund. In the next stage, entitled participants in the National Housing Initiative have this opportunity to purchase units of the construction fund. And in the next stage, the construction fund issues unrestricted vekale. The unparalleled advantage of unrestricted vekale lies in the agent's autonomy to determine the amount and timing of allocation based on their own discretion. Additionally, the agent has the ability to explore alternative investment opportunities such as fixed income funds or mutual funds. The total resources collected from entitled participants, government, and unrestricted vekale are considered as the new NAV of the construction funds. But our model lacks some fuel. The REIT is the fuel that can make it run faster. Government leases some surplus properties through a lease with the option to purchase with a specific discount to the real estate investment trust. It acts like kind of incentive for individual and institutional investors to be attracted to the real estate investment trust. As the percentage completion of the projects in the construction fund increases, the NAV of the construction fund and consequently the NAV of the real estate investment trust goes up. Every 6 months, the owners of the preferred units of the real estate investment trust come on with deciding on the percentage of distributing the amount of the income of real estate investment trust and the percentage of allocating to the construction funds. At the end, I'd like to thanks to my dear family, who played a supportive role for me. We are near to our first wedding anniversary, and I thank my dear wife for her supportive role. Thank you very much. For more information, you can refer to our full paper. Thank you very much.
Bismillah ar-Rahman ar-Rahim. Good morning, ladies and gentlemen. It's an honor to moderate this panel. This panel is about the financing using the capital market instrument to finance SMEs and infrastructure. We have had two papers, scientific papers, talking about the papers on SME, how to use Wakala contract on SMEs, and also for the big project that we are delivering in Iran to construct about 1 million houses per year. It's a plan, it's mentioned in the law, and it will be obligated the government to do that. So we need additional instrument for that. The first paper highlight the complexity of financing SMEs. SMEs are particular, have different varieties, different growth period, different heterogeneities, so you need a flexible instrument to finance them. They mentioned some account, profit account, for the covering the deficit, profit deficit, and also mention different kind of instrument to manage the project. And the study showed that how this type of the contract has superiority over other contracts and other instruments. And also you see the second paper, it is what we need and necessitate to build and construct new houses and affordable houses. So with these two papers, I'm going to go to more policy papers, policy talks, and case studies to wrap up the whole discussion of the using the capital market, different aspect of capital market for infrastructure. So the other panelist has been introduced to you, so for the lack of the time, I go forward to the talks in the panelists. At the end, I wish we are delay for the talk, but I wish we had at the end of the talk, we have, end of the panel, we had some time and for the Q&A questions. And then we can discuss all the papers and all the panelists' discussion. So I would invite, and it will be my honor to ask Dr. Karimi to present his talk. And it's specific on the topic of the development bank, which fit all the puzzle that we had in Iran for the using the capital market for financing the infrastructure project.
Bismillah ar-Rahman ar-Rahim. Salamun alaikum and good morning to everyone. Before everything, I condemn the massacre of the innocent people in Gaza by the occupant regime of Israel. I would like to thank very much indeed the organizer of this event, the Securities and Exchange Organization of Iran. Today I want to talk about the infrastructure project and the role of PFIs, public finance institutions, and development bank as a PFI for financing these projects, and the relationship between development bank and infrastructure and Islamic finance environment. You know, we need efficient and optimal infrastructure system for development of any country, and this is essential for any activities in any countries for their economy. I want to ask who is responsible for infrastructure project financing. Private sector is the first answer for these questions, but we face a lot of challenges for private sector to involve to these projects. One of them is the huge amount of money we need for these projects, and this is not available for private sector to inject this amount of money to these projects. The second is being long-term. Private sector is not interested to inject this finance and invest these projects because of the being long-term. And the third one is uncertainty. We don't know what happens in the future. And the last one is free riding of these projects for development projects in especially in developing countries because of lack of and weakness of regulation. So these four matters are the provision for the private sector to invest in these infrastructure, to these projects. So the public sector is the second answer for this question and for financing these projects. But unfortunately, we have limited resources in public sector too, and we face a budget deficit by the government to invest these projects. We should cover this gap because, as I mentioned, infrastructure project and development project are very important for any countries. In traditional definition of a development bank, I want to focus on that, is a development bank is a traditional definition of a national or regional financial institutions that aims to provide long-term and medium-term capital for invest in efficient projects, which usually requires technical cooperation and are focused in less developed areas. The purpose of development bank is to accelerate and facilitate economic development in a country through the performance of major tasks, including equipping and allocating long-term financial resources with relatively easy conditions and encouraging the private sector to pursue economic development activities. The role of this bank is leverage its resource for the private sector, and by making crowding in effect for the private sector, we can raise money for infrastructure projects. As a history of development bank goes back to 1915s. Banks were established between 1950s and 2000. 55% of them is established in this period of time. And 25% of them established after 2000 after industrialization and in developed countries, and remains significant in this economy too. Development Bank, 85% of world's development bank have 100 government ownership, and only 2% of development banks have 100% private ownership. This is owned by the government. We have 522 public development banks in the world. And the total asset of these banks are $23 trillion. To have a better insight to that, the asset value of the commercial bank now is $22.7 trillion. And 12.5% of financing economy in the world is by this bank. And this is very important for any area and by a specific business model this bank enter to these activities. United States as an advanced financial system has 25 development banks. And after that, Brazil and India are second and third with 21 and 20 development banks respectively. The business model of this bank is different because in a commercial bank you need money creation for having your activities in the economy. But the business model of this bank is based on the leveraging of public sector resources and make leverage for private sector to raise money for these projects, for their activities. So in Iran, because we have high inflation and money creation should be controlled by the central bank, and we need infrastructure project too. This is a trade-off. This bank is very useful for having a good financing for our projects. So the business model of this bank is based on the expected return of any projects. And for any project, you use a range of instruments to have a successful financing for your projects. The services that this bank offered are equipping, facilitating, financing, and crediting development projects, issuance of development bonds and securities, and the purchase and sale of these and other government securities, providing incentives for use of private sector resources, banking of sovereign wealth fund institutions in any country, direct and indirect subsidize the development projects, granting of various credit facilities to development projects, promotion of management system and constancy related to the country's development projects, provision of capital management services related to development projects, study and research services including technical, economic, and other type of R&D that you need in the projects. What is the relationship between the development banks and Islamic finance? As we have different type of Islamic instruments, and we need to create available and honest for people to invest in these securities, this is very important that we have the public resources for that. If we want these institutions, but different type and range of different tools that we can use for any projects, helps to come other people to this environment. And this is not based on the fixed rate rate of return. You enter to these projects, but the expected return, and you have different type of mechanism for any project. And this is available for you because the ownership of this bank is government. The other thing I want to mention, because of the lack of time, 26% of investment of development bank is in SME related activities, and only 6% in developed countries are in infrastructure projects. Let me say some facts, statistics facts about the development banks and the role of them in other economy. German Development Institute, 45.8 billion euros financing of enterprises, startups, and non-profit enterprises, loan to 600 innovative startups and enterprises, 40 billion euro investment in clean and affordable energy, and 50 million euros worth of consulting the package of companies and developing countries. We have the National Development Bank in Korea too, in South Korea, and 40% of financing in this economy is raised and operate with this bank in South Korea Development Bank. In Iran now, we have an article, and we approved this article in fifth five-year economic program by the parliament members, that we have this bank in our economy to semi-finished projects and raise money by the by the Islamic financial instrument in local and international financing. Thank you for your attention. Sorry, because of the lack of time, I summarized my speaking. Thank you.
Thank you. So for the next talk, may I ask Mr. Hamouni to present his lecture? May I ask please show the presentation. So who's responsible for presentation? Can you show the... Okay. So I think you can start.
In the name of Allah and in the name of Palestine. Good morning, everyone. It's my pleasure to having all of you and special friends and old friends in Tehran. And also, I would like to declare my special thanks to Securities and Exchange Organization and all of the staffs for holding such a kind and great ceremony for 15th International Conference of Islamic Capital Market. And also, I would like to declare my condolences of the anniversary of the martyrdom of Her Excellency Fatima Zahra Salamullah Alaiha. As my friends told about the project financing, I have prepared some financial instruments for you about the financing the projects. Let me, my friend, give me the presentation, please.
Yeah, may I ask, go forward,
yeah.
yes.
As you see in the picture, we have so many financial instruments, capital market and also in money markets. In capital market, we have debt market instruments and also equity markets. In debt market, we have sukuk, convertible sukuk, and also istisna. In equity market, we have three types: stocks and equity funds, and also derivatives. In the stocks, we have IPO, underwriting, and private placements. In equity markets, private equity funds, project fund, and also REITs that my friends pointed out about this kind of REITs. And also venture capital fund and convertible fund. In derivatives markets, we have convertible sukuk, convertible fund units, and also option, stock option, and fund units option. Also, we have in money markets, commercial paper, and short-term loan. As you know, I emphasize the, please, the next page, please. Yeah, two key of the success in project financing that I wanted to emphasize in this lecture is the project management team. it's a kind of human capital and human resource management involving experienced, multifunctional, and financial and also technical team leaders or general partner. GP versus limited partner. The GP and general partner is very important key, and is the most important key for succeeding the project is a human and is a team leader of the project man or project woman to lead the project. It's very important because we have done it in MAPNA group. We have done this kind of project, and very important, this kind of measure, financial and also technical profession in the team leaders is very important to succeeding the project. And also convertible instrument, giving the opportunity to investors to convert their shares in financing the project to a stock. That we have done it in the next page, please. We have done Arman Parand Mapna as a power plant in Parand, in city of near Tehran, with the capacity of the 1,500 megawatts hybrid cycle power plants in Tehran for 4 years, by the capex of 600 million euro, and we have done it after 4 years as a convertible fund unit. And we have listed this project to the Energy Exchange of Iran. And after that, the completing of the project, we could succeed to list this kind of project to Iran Faraburs as a public stock market, as a joint stock company. So we have done this case study in project financing, and it is a success story of MAPNA Group and also Iran Capital Market. Thank you so much.
Thanks for Dr. Karimi and Mr. Hamouni for presenting and partaking in this panel, and also 2 papers presented earlier. If I want to go very quickly on my presentation, if you go forward to my presentation. And so IME, Iranian Mercantile Exchange, is the major and the largest exchange that deliver about $25 billion of commodity based on about 500,000 contracts annually. So about 700 suppliers sell the product in this platform, and about 1 million buyers shop from this platform. It's a huge platform that going through all sectors in the economy. The next slide, please. So we have providing, next slide, we have providing different kind of credit for the buyers and sellers in type of LCs, traditional LCs. About $12 billion physical salam transaction is happening here, and also $10 billion for financing the buyers. Different kind of guarantee obligation. The buyer and seller should deposit in the settlement of this IME. Next slide, please. So this is the main slide I would like to present here and give you the idea of what we want to do. So we have the whole supply chain of one example for a steel chain example. It's from the bottom line, for example, you start with hot rolled steel coil. The trade is about $3 billion. Then one top level is a steel slab, is about $1 billion. And it's providing with different companies. So different companies sell their product in this platform. And going forward, you have a sponge, you have a iron ore, the concentrate, and going from the fine iron ore and the iron ore lump. So you see different companies is selling their product in this supply chain using all this platform of the IME. So the buyer and seller in each contract should deposit, different kind of LCs. The whole idea of financing the one kind of trade credit that can happen here to produce some tokenized LC. So if it's kind of credit for buying different products based on what you have in your wallet. So if you go to the next slide. Go to the next slide. So this is the whole idea. So we have a central registry. This product, which is ruled by the different kind of financial sector, and we have the rules and regulation for that. The central registry, the product, the instrument is called GOM. And the central registry is in the central bank. So every issued GOM should be registered in the central bank, is in the middle, GOM central registry. And we are the platform. The IMSO is a trade settlement that all the buyers and sellers, through the action, sell their products. So the seller's broker mentioned in the offer of the notice what kind of GOM will accept through the trade. This is the offer notice, and will be published at least one day before the trade, before the auction. The buyers, the broker of the buyers, see the offer of the notice and inform the buyer, the potential buyer, that you can buy, for example, the steel, different kind of steel, with this GOM that has been mentioned in the offer notice of the seller. So then the auction occurs and take place. And the winner is, for example, a copper producer, the wire producer who need the copper cathode. Then we have 3 days that the settlement for a trade should be took place. At these 3 days, the buyer will go to the registry online, absolutely online, to the registry, and say that I have this type of GOM and I want to buy the commodity with this GOM. So instead of transaction by money, we just change the owner of the GOM. So part of the credit, so this is a movement of credit, back-to-back LC, but tokenized LC. So you can see how one party produced the GOM, then give the GOM to the next party, the next seller, and the seller now become the buyer in the next trade. So the new buyer buy the product by GOM. So in one creation of credit, you have at least 5 or 6 part trade or chain trade happening in the supply chain. So the whole idea is that, and the central bank and different kind of regulation are ready to implement this idea and this instrument. We expect that at least we have a $2 billion GOM trade next year. And after that, every banks should be connected to the trade platform and using that new instrument for buying the part of the credit of each transaction. So I think this is my last slide. And what we're gonna do today, right now, is that I try to, so you can finish this slide. Who is the, okay, thank you. So what I'm gonna do right now is that I briefly discuss papers and discussion to have a big picture on the panel. Then we go to the panelists to have any discussion on the papers or other comments in the panel. Then we go to the audience if there is any question or discussion. So my understanding of the papers was that if you want to finance with the financial instrument, the SMEs, because of their heterogeneity, because of their complexity, you need the new kind of vakala contract or vakala securities, sukuk, such that it would be convertible. You need some reserve, some account, and for the profit, and then you need specific kind of management for those as a SPV in the middleman, intermediary part. The second paper highlights that the lack of the construction for building and housing in Iran, you need some kind of big project, big SPV, part of them public, part of them private, using the leverage of the private, and also the sukuk, again, the Wakala sukuk, because of its flexibility, to finance this large project which has been introduced in Iran. The third paper, the third talk, which is the first panelist, Dr. Karimi presented, mentioned that in addition to other idea, you need a development bank. We do not have development bank as standard development bank in Iran. The government can use its own money in this development bank and finance SMEs as well as other large project investment. And the final talk, I mean, Mr. Hamouni's talk, not my talk, was about the case study of the project finance, how they had a successful project finance to produce, to construct a generator and produce an electricity. And the final talk was how we can use a new tokenized LC instrument for the trade on the platform, on the central platform and central registry. So you have a unique registry and you have a central platform which is huge, $35 billion. And it can facilitate and reduce the cost of the financing. So by this wrap up or this summarization of all this talk, I go to the panelists for any comments on papers and other talks. Do you want to start, Mr. Hamouni?
Yeah.
Thank you.
You know, for the first article Dr. Freidouni presented here, I want just get one comment about, you know, all types of sukuk is not suitable for SMEs because we have to be conservative issuing sukuk in terms of debt market and also debt sukuk because you know they are enforced in the risk of the default for this kind of fixed income sukuk, but Dr. Freidouni proposed a special sukuk, Wakala sukuk. From my point of view, Wakala sukuk can mitigate this kind of risk for default. SMEs are very, vulnerable companies, and we have to, we have to be conservative about all types of sukuk for financing the SMEs. Because of that, I wanted point out about these comments. Thank you.
Wakala sukuk is a suitable instrument for Islamic finance capital market, in the capital market. But Mr. Freidouni mentioned to reserve account and the mechanism of this account make it complex for issuing sukuk. For issuing sukuk, we should pay attention for our designing. We need to use from the existence element of issuing sukuk. Adding other elements make it complex, and this is not reliable and usable for economy, for issuing. And for government, for Wakala sukuk, we are designing a mechanism for that because, as mentioned in the article, in this paper, this is very usable for the government, especially for our government, but because we don't use the conventional bond in our economy for financing the government. Because you or the flexibility of this type of sukuk is very, very important, and this is a significant feature of this type of sukuk. Thank you.
So let me say my own comment to the first paper. So right now the SPVs in Iran are not active to some extent for different kind of the sukuk. They are passive. But if we want to have a Wakala sukuk, we need to some extent active SPVs such that it mitigates the principal agent problem. Because as mentioned in the paper, the SMEs do not have a credit history. So you need an active screening and monitoring, and how they will be free, absolutely, it will be flexible how to use the money, but some kind of supervision is necessary during the supplying the money. So the paper is very good in terms that the current sukuk in Iran is probably not working for the SMEs. And we need some kind of wakala. It's increasing the risk of the principal agent, and it has some kind of principal agent problem because of its flexibility and kind of contract of the wakala. But the paper should also mention and highlighting the role of the SPV here as a monitor of how fund is being used and mitigating the risk. So this is my first comment for the first paper. For the second paper, I guess, we need some estimate of how much money can be raised by issuing this type of the sukuk. And is it how much of the whole project can be financed by this type of sukuk, and how this big project, this infrastructure, building housing in this country, how it affects the interest rate. And it will be very effective. So my take is that probably enrolling the development bank is more suitable than issuing debt, issuing sukuk for the building the national housing project. By this, I invite the knowledgeable experts. If you have any discussion, go please.
Bismillahirrahmanirrahim. First of all, I would like to present my deepest thanks for the Security and Exchange Organization of Iran for this holding the 15th ICM conference, for the board and for the staff for their effort to organize this high-level conference. Second of all, I would like to thank all the panelists for their, very good and excellent papers presented today. My, questions it's really one question, but consists of 3 bullet points, okay? The first one, I would like to hear what is the definition of SMEs in Iran for all the panelists. And second of all, do you think that the company law of Iran may be in any form obstacles for SMEs to issue a sukuk? And thirdly, I didn't hear anything about using sukuk to enlarge the business of the companies of SMEs. Thank you.
Any other comment, question?
Yeah,
Please, go ahead. So let me, at the end, we come up because of the lack of the time. Sorry about that. Go ahead.
Okay. That was a very interesting paper. And I would base my observation in the light of experience that I have in my own country with regard to MSME finance. So instead of SME, we also add micro, small and medium enterprises. And they are actually backbone of any economy in terms of employment, in terms of export, in terms of foreign exchange. because millions of enterprises are spread. As rightly said that because of credit history or lack of credit history, banks are not very suitable means. Microfinance institutions are also not very suitable means for this. So what we have tried to develop there is a micro equity model. So a fund is created, a venture capital fund, and that takes into micro equity, not in the sense of taking long-term ownership, but solving the problem that entrepreneur is. So it is risk-sharing based thing where profit is linked to the revenue, not the actual accounting problem is there, because these MSMEs also have accounting issues. They're single unit kind of things. And that is doing really well in terms of profit. So I would suggest that if possible, maybe this micro equity model could be tested to see, because ultimately when you look at Wakala and Sukuk, these are fixed income instrument. And the burden of that, come what may, is actually on the entrepreneur. So how could we generate some more kind of more instrument which are more friendlier to the entrepreneur is the issue that I think. Thank you.
So any other comment and question from the expert? And please go ahead.
Actually, I would like to highlight some.
Oh, I cannot hear. Can you?
Now you can hear?
Yes, go ahead.
I would like to highlight some of my views regarding REITs. We were talking about construction activity through real estate investment trust. So what I am thinking is that if any asset is being developed, that need to be valued by a valuer against which the units are issued. The valuation of that unit is very important, and the valuer role is in construction activity is of course is very crucial. At the same time, to authenticate the valuation, it needs to be further authenticated by the chartered accountant firm or auditor that the valuation of assets against which units are issued are correct. I mean, this is my view. But at the same time, I think there could be three types of REIT. Construction REIT, that is development REIT, hybrid REIT, and rental REIT. So rental REIT is also very important. You see, you can issue units against already constructed project. So and hybrid also. So we didn't talk about the hybrid REIT and the rental REIT. We only talk about the development REIT only.
Yes, thank you very much for the opportunity. A few small comments for consideration of the experts. Number one, as have been mentioned, that property pricing has remained an issue, and specifically in terms of deriving the valuation of the units of the REITs. So to my very limited understanding of the market, the only solution is that the property trading should be registered. There should be proper indexation of the property prices. Developing and reporting property indices is the only solution to reach a fair value. Using a valuation model by a third-party evaluator, sometimes it falls short of the wants of technical pricing, specifically in terms of accounting treatment, how the valuation is treated. One suggestion is that in Pakistan, in the housing sector, we have been using a model of diminishing musharaka. The property and the overall value is divided into a certain amount of units, and then the units are being purchased by the owner of the period of time. And specifically where the model suggested that the land shall be sort of given free of cost by the government to the project in the second presentation, there is another model we are following in Pakistan which is called public-private partnership. And the projects can be executed on the BOT, BOOT, in other different models as well. So I think the experts should consider these options. Just a small comment, tokenization of the LC and financing of the value chain, that's a very, very interesting concept. I just want to have your views on the fact that if we construct, let's say, a value chain of, let's say, steel bars, and it starts with iron ore, does it cause some delay in the delivery of the product if the same, let's say, discount receipt is being moving up the chain from the first bidder to the actual producer of the iron ore and the mining company? Does it cause this delay in terms of production?
Okay. So, excellent comments. Any other comments? So, let me start from the last one, which is related to me. So, just one question. Do you have a PPP rules and regulation in Pakistan? Okay, good. So, in terms of REITs and PPP, unfortunately, we do not have the PPP laws in Iran. So, the parties and the co-signees on the PPPs are not well defined here. And we do not have some, how I can say that, the partnership with the real private. And because of the lack of the regulation and rules, let's say that, then they are risk averse to partner with the government. And the second issue is some sort of the price setting by the governments for some products. And due to inflation in Iran, so there are some political issues on that. In terms of the REITs, my understanding of the paper was that it was focused on the construction REITs, not hybrid REITs. Actually, we just have two types of the successful REITs in Iran. I mean, two examples, not more. So it's very recent phenomena in Iran, having the REITs in the financial market. But the REITs in the paper, more or less, was the idea based on some rules that it is to some extent, let's say, it's a public. So the REITs owned by a fund, which is a construction fund. It's a national housing fund. So it's using the sukuk based on the REITs, not the REITs in the financial market. At least my understanding of the paper was that. So it's a very great idea to have the indexation and some kind of mortgage-backed security of other kind of real estate securities to build on that, the REITs, but we do not have deep housing securities to make REITs based on that. But it's a very great idea and also very great. About the dealing the tokenized LC, since it's facilitating the LC. Right now, the company is doing two-party LCs. So this is just transferring the LCs. So it's reduced the time, not increasing the time. The LC has been made, for example, 3 months ago for another contract. We just deliver that to this contract and build this contract based on the credit has been built before. So it helps to facilitate and helps make it quicker to settle for the contract. All contracts in the IME must be settled in 3 days. And so not that much differences in time. And I mean, all parties has practiced that. So on the question of the first question, may I ask the SMEs? Yeah, definition.
You know, there are so many types of definition about the SMEs in each market in terms of number of employees, in terms of paid capital, and also these kind of elements. In Iran, the definition of SMEs has both two elements of the non-profit employee and also paid capital, up to 100 number of employees, and also less than 100 billion toman. And you know that we have established this kind of SME market in Iran Faraburs capital market. It has a growing trend for SMEs, and this week I heard the board of the Securities and Exchange Organization of Iran has ratified new rules and regulation to boost the markets of SME, and they changed the name of that market, Noa Farina. That means new creation market for these kind of companies.
Capital, or you said turnover?
Capital.
Capital.
Yeah.
So there is a risk of moral hazard in reporting capital invested. In many countries, it is the turnover because that is easier to measure. So turnover and number of employees are the two elements for defining MSMEs or SMEs, rather than the capital infused, because capital infused can always be over-reported.
And after that, after growing these companies, they can go public to the first, or the higher markets of Iran Federal Bourse and Tehran Stock Exchange. No, just housing. Sukuk can, all types of companies in Iran can issue the sukuks for their assets in each sector. But
So
in housing, Dr. Sadruddin, the second paper, has proposed and also suggests this kind of sukuk for housing sector. But in Iran, we have a special housing sector. Belongs more than 97% of housing market in Iran belongs to private sector. And this kind of instruments that Dr. Sadruddin presents, it's a kind of, make it public as a private, instead of private, yeah? And because of this, this is kind of challenging for boosting the public sector for housing in Iran. Just nowadays, 3% of the housing market belongs to the developers, and also, mass production of the companies to make house. Yeah,
yes, we
yeah,
have a company.
yeah, yes.
No. So yes, but we do not have a law for the SMEs, specific for the SMEs. Some countries have a law for specific SMEs, so divided that. But all the company are public, private, and these two type of the companies existed in Iran by the law, but no law definition of the SMEs. Yes. So, and I enjoy from your comment. I appreciate for that. I'll learn about that.
Just a little supportive comment, if I may.
Okay, go. Very short, please.
Yeah, very short. As Sharik Saab have just mentioned, there are two ways to assess what an SME is. There is a turnover-based formula, and then there is a capital-based formula. As Iran has adopted the capital-based formula, it means the SME is declared at the time of licensing, the incorporation. How do you actually graduate then the SMEs to the large-scale market players? Is it purely on reporting basis? Is it some audit base? How do you get to know that if a company has now graduated in terms of its overall?
So we have I go very brief on that. We have it on the capital market. We have two different exchanges. One of the exchanges is mainly defined for the SMEs, for the new entrant. And they go for different level after higher standard of the reporting and making money and profiting. Then they go upward, and then they can change between exchanges. So they started gradually small, and they go big. Okay. Thanks for all the comments. Thanks for the presentation of the two papers by author, and thanks to my colleague, Mr. Karimi and Mr. Hamouni. I appreciate your comment. I hope you enjoy the conference, and especially this panel. Thank you. I appreciate it. Bye.